Do you believe that Tesla is currently one of the hottest stocks? If yes, which additional equities do billionaires think are worthwhile to purchase? Barron, Ron, it will be in your best advantage to attend this one since Barron is renowned for his extensive investing knowledge. According to Elon Musk, those that are long-termist, optimistic, and focus on the future rather than the present are most likely to succeed. Then he claims that, rather than tomorrow or the following quarter, what you actually need are people with boundless time horizons. Rise, claims Ron Barron. Ronald Stephen Barron, better known by his stage name Ron Barron, is an American mutual fund manager, investor, and the founder of Barron Capital, a growth-oriented asset management company. Solutions for equity investments with 52 years of research experience with buy and hold investors. Ron started Barron Capital in 1982. Just 3% of the $10 billion flagship fund Bear and Growth's assets are turned over annually. Ron Barron now has a net worth of $4.2 billion. In light of the market's recent recovery from June's lows, Barron Capital CEO Ron Barron recently appeared on CNBC's Squawk Box to discuss prospective investing approaches. We are investing in growth firms, so the growth companies are our hedge against inflation, Barron said in the interview with CNBC. In the aforementioned interview, Barron disclosed the stocks that they are consistently purchasing, including Tesla, SpaceX, and FIGS, which he dubbed the Lululemon of the healthcare industry. Ron Barron still owned roughly half of Barron Partners' stake in Tesla as of early August. Even still, the longer-term performance of the fund is interesting both with and without consideration of its Tesla holding. On April 30, 2003, Partners, which had originally been a private partnership, changed its name to a public mutual fund. From that point through the end of July 2022, the fund generated a scorching 17.93% annualized return, compared to returns of 11.6% for the Russell 1000 Growth Index and 10.3% for the SP 500. Both before and after Tesla, the fund was able to easily outperform the index. In the first quarter of 2014, Barron made his first Tesla purchase. The fund has generated a 21.9% annualized return since the start of that year through July 2022, compared to a 14.46% annualized return for the Russell 1000 Growth Index from its creation through the end of 2013. The fund's 14.78% annualized return, however, beat the Russell 1000 Growth Index's 9.34% annualized return when it did not own any Tesla shares. Prior to Tesla's initial inclusion in the fund, its top holdings included Hyatt Hotels, ITC Holdings, and specialty insurer Arch Capital. Along with Vail Resorts and Charles Schwab FactSet Research, the fund also owned two private interests, Windy City Investment Interests and Carlyle Group. Charles Schwab and Arch Capital were two of the stocks that the fund owned when it initially went public. From the start of the fund until the end of July, such stocks had annualized returns of 12.95% and 13.53%, respectively. Additionally, the fund has held Vail from the first quarter of 2008, from that time until July 2022. In terms of annualized returns, Vail has outperformed the Russell 1000 Growth Index, 11.36%, and the S&P 500 to 9.37%, just before purchasing Tesla, which quickly became Barron Partners' largest investment. On December 31, 2013, the fund's largest holding was a 10.02% allocation to Arch Capital. The fund's positions, which normally consist of 30 stocks, have previously reached double digits. For instance, the allocation and win choice point at the end of 2013 was 18.57, while resorts were 14.91. None have come close to Tesla's present allotment. The company now produces about 1 million vehicles, whereas the top two automakers in terms of vehicles delivered, Toyota and Volkswagen, produced less than 20 million vehicles combined in 2021. Ron Barron has predicted that Tesla will generate 20 million vehicles in 10 years. For Barron and Tesla, that's it. But the story doesn't end there. Barron is also optimistic about another business run by Elon Musk, SpaceX. In late August, billionaire Ron Barron invested $100 million in the company. He expects his Tesla holdings to make 3 to 5 times that amount in the following 10 years. The founder and CEO of investment management company Barron Capital told CNBC that they had invested roughly $100 million in FIGS, which he referred to as the Lululemon of healthcare. His most recent actions were investments in SpaceX and FIGS, a company that makes scrubs for hospitals, he claimed. Barron took part in earlier SpaceX fundraising events. On Twitter, SpaceX has disclosed a partnership with T-Mobile that will improve connection. In addition, Barron disclosed that he has purchased shares of Red Rock Resorts and Hyatt Vale Resorts, demonstrating his optimism for the travel industry. A well-known Tesla bull, he calculated that his initial investment of $380 million in shares of the EV manufacturer in 2014 has yielded profits of between $6 and $7 billion. In the following 10 years, he added, he anticipates his fund will make 3 to 5 times as much money on Tesla. I predict that Tesla will overtake SpaceX as the largest corporation in the world within the next 10 years, and that Tesla will continue to hold that position for the following 10 years. In general, Ron Barron has been purchasing shares of Elon Musk, the primary Tesla, SpaceX, FIGS, Hyatt Vale Resorts, and Red Rock Resorts in the travel industry. Given that he is a master of growth investment, which includes, among other things, selecting firms with possibilities for higher-than-average profit development, Barron was questioned about what he looked for in an interview a few months ago. Everyone can understand what a growth company is, he claimed, but the ability to comprehend competitive advantage, which he views as the most crucial factor, is difficult for most people. That is something that an algorithm cannot determine. You must comprehend a corporation, how it functions, and what makes it challenging for rivals to compete. Tesla was cited by Barron as an illustration. He claimed that Tesla's culture of quick innovation gives it a competitive advantage. Tesla has a 10-year history of producing electric vehicles and batteries. An entire industry has been changed by it. We make investments based on what we believe a company will be valued in 5 or 10 years, rather than what it is currently worth. About every 5 to 6 years, we've aimed to quadruple our financial resources. We've been able to do that by making long-term investments in companies we think have a competitive advantage and are run by excellent people. We are more concerned with businesses and with stocks and stock markets. When asked if he had ever kept stocks that underperformed for a few years, Barron acknowledged that he had. That is frequently the case, he said, using Tesla as an example. He revealed that between 2014 and 2016, his business invested $380 million in Tesla. He continued, even though we thought we could make 20 times our money in 10 years, we regarded it as a risky investment at the time, so we invested less than 2% of our firm's assets in the stock. Manufacturing cars is a highly regulated, capital-intensive industry, and few people believed Elon Musk's electric car company would be successful, especially because financially powerful automakers and their dealers and unfavorable government regulations were in place. We were accurate, and Tesla's sales have continued to rise sharply from 2000 through 2021, even though its share price, albeit being incredibly volatile, changed little over much of that time. With a 20-fold increase in share price, Tesla has returned nearly $7 billion on our initial investment. Over the next 10 years, we anticipate at least a 3 to 5-fold return on our investment. Barron Capital CEO Ron Barron stated in a CNBC Squawk Box program that he intends to own Tesla stock for an additional 8 years. I believe that we will eventually profit 3, 4, and 5 times as much from Tesla. The shares of Tesla are expected to continue to soar for the next 10 years, according to billionaire investor Ron Barron, whose fund has already profited $6 billion on its initial investment. According to Barron, who invested $380 million in Tesla between 2014 and 2016, his return has been roughly 20 times, or about $6 billion, with an average price around $40 per share. To diversify the portfolio, Barron sold the 2 mutual funds that own around $1 billion worth of stock. Currently, Tesla makes up around 12.8% of the company's managed assets. He declared, I believe that this is just the beginning for Tesla. In fact, the multi-billionaire investor predicted that by 2030, the electric vehicle manufacturer's income may reach $1 trillion in an interview with CNBC. For additional details on the financial sector, including this one, make sure to subscribe to this channel.